Welcome to Informed Investor. Today, the Indian stock market is witnessing a sea of red. Both our benchmark indices, the Nifty and Sensex, have declined significantly and dragged down by a confluence of factors. Moreover, reports suggest that this massive sell-off resulted in investor losses nearing 10 lakh crore in a single day. But wait, why is the market falling today? This decline can be attributed to several factors. Firstly, persistent selling in the markets to the tune of 64,156 crores by FIIs or foreign institutional investors so far in the month of January. Second, weak Q3 earnings by Indian corporates leading to dampening investor sentiment. Third is concerns over Trump tariffs in India and the upcoming Fed meeting on January 29th. And lastly, our most anticipated event, our budget that is due on 1st of February. Now, amid this market turmoil, a prominent name in the financial services sector, CDSL, has taken a significant hit with its shares plummeting by staggering 9%, raising questions about the underlying causes of this significant drop. So stay tuned till the very end to know it all. Now, before we start, let's do a quick business overview of CDSL. Think of a depository as a bank for shares. Just like you deposit your money in a bank, you deposit your shares, bonds, and other securities with the depository. This eliminates the need for physical certificates, making transactions faster and more secure. So CDSL, or Central Depository Services Limited, is a prominent securities depository in India, playing a vital role within the country's financial markets. As a market infrastructure institution, CDSL forms a crucial component of the capital market structure, providing essential services to all market participants, including exchanges, clearing corporations, depository participants, issuers, and investors. So basically, CDSL acts as an intermediary between investors and the stock market, facilitating the safe and secure management of financial instruments such as shares, bonds, mutual funds, and debentures in dematerialized form. Now, as of December 31st, 2024, CDSL has established itself as a trusted depository with over 14.65 crore investor demat accounts holding an estimated value of a massive 74.5 lakh crore rupees. If you're wondering how CDSL generates its revenue, a major chunk, about 79.4% of its revenue, comes from the depository activity, which involves the holding and transfer of securities in electronic form. The data entry and storage segment contributes 20.35% and it focuses on managing and storing financial data, while the repository segment contributes 0.21%. It basically deals with storing records and information related to securities. Overall, CDSL is primarily dependent on its depository services, while other segments playing a smaller role. Another interesting fact about CDSL is that it has a well-diversified ownership structure. BSE is the promoter of CDSL and holds 15% stake, while mutual funds own 11.21% and foreign portfolio investors hold 17%. The institutional versus retail split is 55.33% to 44.67%. Now, moving on to the recently released third quarter results, CDSL reported total income of 298 crore, reflecting a year-on-year increase of 26.3% compared to 236 crore from the previous year. However, this figure represents a significant decline of 17% from the previous quarter's income of 358 crore. Expenses, on the other hand, rose 30% to 168 crores. Now, when we look at the bottom line of profitability, it rose to 130 crores, an increase of 21% from the previous year's 107 crores. However, it was down 20% sequentially from the previous quarter, which came in at 162 crores. The company also reported that it opened approximately 92 lakh new demat accounts during this quarter, which is notably lower than the 1.18 crore accounts opened in the preceding quarter. This decline in new account openings is concerning as it indicates reduced investor interest and activity. Additionally, demat custody at the end of December quarter stood at 75 lakh crore, down from 78 lakh crore in September. Now, why are CDSL shares falling? The recent drop in CDSL's share price by 9% can be attributed to several factors. Despite reporting growth in total income and profit year-on-year, the sequential decline raised alarms among investors about the company's operational efficiency and future prospects. Moreover, these results were well below the street estimates. The significant drop in demat account registrations to the tune of 92 lakh signals decreasing investor interest, which could affect future revenue streams for CDSL. The overall bearish trend in the markets has created a negative sentiment around CDSL shares. Moreover, following a substantial rise in CDSL stock price over the past year, some investors may be taking profits amid broader market declines. Now, following CDSL's weak earnings show and slow Dmart addition, this impact was felt over other capital market players as well. Shares of Angel One and 361, formerly known as IIFL Wealth, also witnessed a sell-off in its shares up to 5%. Analysts remain divided on CDSL's outlook following the recent results. Out of 10 analysts covering the stock, 6 have issued hold ratings. 2 analysts have recommended buy, while 2 suggest sell. This mixed sentiment reflects uncertainty about CDSL's ability to sustain growth amid declining account openings and profitability concerns. Now, to conclude, while CDSL has established itself as a key player in India's financial landscape with impressive growth over the years, recent developments indicate that it faces significant challenges ahead. The sharp decline in its share price following its Q3 results serves as a reminder of how quickly market dynamics can shift. Investors will need to keep a close eye on both CDSL's performance metrics and broader market trends to navigate this uncertain terrain effectively. As we move forward into 2025, only time will tell if CDSL can regain its footing or if it will continue to be swept along by the currents of market volatility. Having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.